What are the key differences between SBA 504 and SBA 7A?
The key differences between the 504 and 7A is 504 is only going to finance heavy machines and or real estate. So really just primarily real estate. 504 has got a 10-year prepayment penalty. The 504 has got two loans. It's a first and a second. The second is the guaranteed piece. The bank typically funds the first and second. Two underwriting processes. One, it has to go to the CDC, which is a nonprofit that works in conjunction with SBA. Different caveats on LTV. On startups, they automatically give you a 5% haircut on leverage. And if it's special purpose, they'll give you another 5% haircut. So you sometimes get less leverage. You get better rates. The second loan is, which I'm just going to use a $1 million example, $500,000 senior bank loan. 40% or $400,000 would be the SBA piece, and then 10% equity injection. But if it's special purpose, we're knocking 5% off LTV or LTC, loan to cost, and 5% off because it's considered a special purpose building. And so not all hospitality falls in special purpose. I'd have to verify with the CDC on the particular project, but some will if it's a unique type of project. But those are the general differences. 7A's got one underwriting process. 7A's got a shorter prepayment penalty. 7A's capped at $5 million. 504, you can do $20 million deals, $22 million deals. Not as common. Most of the time, 504, you're going to see like $3 to $8 million deals, but you can get bigger if it's strong enough. So those are really the differences. They both have different use cases. The 504 has a program called the 504 Green, which could be useful to get more proceeds because your aggregate amount of SBA financing is $5 million. If you do an SBA 504 Green, you can have up to $16.5 million. They just changed the rule, and I think it's for certain businesses can have an unlimited amount of SBA proceeds. So anyways, there's different use cases. Sometimes I do a 504 with a companion 7A for working capital. That's the other thing too. With 7A, you can build in working capital. You can't build working capital with the 504. So those are the primary differences. They're both great products. They're both going to help you grow your business. It just depends on the situation.
So there's a follow-up question to that. Which SBA loan type, 7A or 504, has higher approval rates for business owners?
7A by far, because we're dealing with mostly PLPs or preferred lenders. They don't need to send the file to SBA for underwriting. So PLPs on the 7A, you're going to get a much higher approval rate, a lot less BS. For sure. 7As are going to be easier 9 out of 10 times, if not 10 out of 10 times. Hope that helps.
Hi guys, Bo Exine here. If you want to visit myterritorycheck.com to find out if the franchise we spoke about on the show, or maybe it's one you've investigated and you're trying to see if it's available in your market, you simply go to myterritorycheck.com and we'll do a quick search for you. You enter in your name, email, zip code, and we'll get back to you as soon as possible if that particular franchise is available. We'll also send other franchises similar to that if it's not available, so you can figure out what is available in your marketplace as you're diving into different franchise models. So go to myterritorycheck.com and we'll help you out as quickly as possible. See you soon.
Hey guys, Bo Exine here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.